Good day everyone. Welcome to another video lecture for Intermediate Accounting 3. I am your instructor, Ms. Jazome Celerinos Del Monte. So in this video, we are going to discuss the statement of financial position. So what is a statement of financial position? A statement of financial position, or also known as the balance sheet, is a formal statement showing the three elements and their balances comprising the financial position, namely the assets, liabilities, and equity. Also, statement of financial position helps the users evaluate the liquidity and solvency of the entity. So what do you mean by liquidity and solvency? When you say liquidity, it is the ability of the entity to meet currently maturing obligations. So is there any available fund, or is the assets or resources of the entity can meet the currently maturing obligation? Then if the answer is yes, then the entity is said to be liquid. While solvency, it is the ability of cash over the long term to meet maturing obligation. Okay? Liquidity and solvency are somehow the same. Ang nakalahi lang is that for liquidity, we are going to evaluate whether there are available funds to meet currently maturing obligations. While solvency, is there any available funds or cash to meet long-term obligation? So, kung ano ba siya, sustainable ba ang entity? Makasustain ba siya? Makabayad ba siya in the future sa mga long-term obligations? Now, a statement of financial position is a formal statement showing the three elements comprising financial position, namely the assets, liabilities, and equity. Investors, creditors, and other statement users analyze the statement of financial position to evaluate such factors as liquidity, solvency, and the need of the entity for additional financing. Information about priorities and payment requirements of existing claims can help the users predict how future cash flows will be distributed among those with a claim against the entity. So, who have claims against the entity? So, sila yung mga investors at saka mga creditors. So, diba, in the statement of financial position, it also shows the basic accounting equation that asset is equals to liabilities plus equity. So with that equation, may balaan nato asa mapadulong ang mga resources. Okay, how do we distributed the assets or the resources among the creditors and the investors or the owners? In other words, information about liquidity and solvency is useful in predicting the ability of the entity to comply with the future financial commitments. Now, in the statement of financial position, as we show the accounts under those elements, there is a current and non-current distinction, meaning in reporting, we need to classify those items or accounts into a current or non-current distinction. So, Pass 1, paragraph 60 provides that an entity shall present current and non-current assets and current and non-current liabilities as separate classifications in the statement of financial position. So, more likely, the assets and the liabilities elements should be or shall be presented into a current and non-current classification. However, an entity shall present all assets and liabilities in order of liquidity. Okay, so after we classify the asset accounts and liabilities account into current and non-current, so the sequence or the order of order of the presentation or reporting should be based on the liquidity. When such presentation provides information that is faithfully represented and more relevant. For example, for current assets, mostly ang mag-una man gyud no is cash because cash is the most liquid among the current assets. So, order of priority, so dito ta mag-una sa cash, sa most liquid until the least liquid. When an entity supplies goods or services with a clearly identifiable operating cycle, the separate classification of current and non-current assets and liabilities is useful information by distinguishing between net assets that are continuously circulating as working capital from the net assets used in long-term operations. So, the basis of determining whether current siya or non-current is that usually when you say current, it would be realizable or to be settled within 1 year period or within one cycle. Aside sa katong 1 year period, dapat isa sa basis of classifying if it is a current or non-current is that if within siya sa operating cycle. So, if kato siya nga mga items can be realized or settled within the operating cycle, then that would be classified as current assets or current liability. It also highlights assets that are expected to be realized within the current operating cycle. Liabilities that are due for settlement within the same period. For some entities, such as financial institutions, a presentation of assets and liabilities in increasing or decreasing liquidity provides information that is faithfully represented and more relevant than current and non-current presentation. Financial institutions do not supply goods or services within a clearly identifiable operating cycle. So let's proceed with the elements of the financial possession. Let's start with the assets. So assets are defined as resources controlled by the entity as a result of past transactions and events, and from which future economic benefits are expected to flow to the entity. So take note, when you say assets, these are resources. Okay, resources controlled by the entity or owned by the entity. So all the resources used by the entity wherein the entity has no control or the entity has no ownership, that should not be reflected as asset. So in layman's language and in short, assets are properties owned by the entity. So based on the definition, there are essential characteristics of an asset. These are controlled by the entity, results or it is the result of a past transaction or event, provides future economic benefits, and the cost of the asset can be measured reliably. So kana sila, if na isa diraa nga wala, okay, at least isa nga wala, then it should not be an asset. So, assets are classified into current and non-current assets. So, unsa man ang mga current assets? So, Pass 1, paragraph 66 provides that an entity shall classify an asset as current when the asset is cash or cash equivalent unless the asset is restricted from being exchanged or used to settle a liability for at least 12 months after the reporting period. So basically, when the asset is a cash and cash equivalent, that should be a current asset. However, if such cash or cash equivalent is restricted from being used within the 12-month period, then exemption siya. Dili siya pwede i-current asset. The entity holds the asset primarily for purpose of trading. So again, ang keyword nato ani is primarily held for the purpose of trading. Examples, accounts receivable, okay? Trading securities. Okay, so basta ang purpose is for trading, for exchange, then that would be current asset regardless of the period that it will be realized. Meaning if the nature of the account is accounts receivable but it happens to be recollected after 1 year pa, since the accounts receivable purpose is for trading, then ma-disregard tong period kano sa ma-realize ang accounts receivable. Therefore, the accounts receivable shall be classified as current asset. Next, the entity expects to realize the asset within 12 months after the reporting period or within the entity's normal operating cycle. So, what do you mean by operating cycle? So, the operating cycle is from the point wherein the goods or services are purchased until the goods or services are being provided to the customer. So, mo na siya ang operating cycle. So, mo na siya, no? Nature of current assets. Dapat current cash and cash equivalents that are unrestricted. Otherwise, if it is restricted, then dili siya pwede current asset. Held for trading and expected to be realized within 12-month period or the entity's normal operating cycle. Presentation of current assets. Current assets are usually listed in the statement of financial position in the order of liquidity. So, mag-una gyud to ang more liquid or the most liquid until the least liquid. So, minimum line items under current assets. So, what do you mean by minimum line items? So, these are the accounts or line items that should be reported in the face of the financial position or in the face of the statement of financial position under current asset. Meaning, mo ni siya ang mga group of accounts. Okay? Mga group of accounts or what we call the minimum line items that will be reported in the face of the statement of financial position under the current assets. So, what are those? We have cash and cash equivalents. So, cash and cash equivalents is the group of the cash in bank, cash on hand, mga marketable securities. Isa na sila ka-grupo, i-group na siya into one minimum line item. We have cash and cash equivalents. Financial assets at fair value such as trading securities and other investment in quoted equity instrument. So, kani siya group of investments, group of financial assets measured at fair value through profit or loss. So, i-group lang siya. Then, letter C, trade and other receivables. So, this is the minimum line item for all the receivables, types of receivables that are realized within a 12-month period. So, trade and other receivables. Inventories. So, this is the minimum line item of all types of inventories. That could be merchandise inventory, finished goods inventory, work in process inventory, or the raw materials inventory. And last but not the least, prepaid expenses. So, there are so many kinds of prepaid expenses. So, dili na to siya pwede isa-isahon in the face of the financial position, in the statement of financial position. Rather than, it will be lumped into one minimum line item, and that is prepaid expenses. Next classification of asset is the non-current assets. Pass 1, paragraph 66 simply states that an entity shall classify all other assets not classified as current as non-current assets. So, meaning residual definition of a current asset, C, non-current asset. So, if the asset cannot be qualified to be reported as a current asset, then of course dito siya sa non-current assets. All others are classified as non-current assets. Accordingly, what are the minimum line items for non-current assets? We have property, plant, and equipment. So, tanang mga property, plant, and equipment such as land, building, equipment, machinery. I-lump na siya into one minimum line item, and that is property, plant, and equipment. Long-term investments, intangible assets, and non-current or other non-current assets. So, what will happen to those specific accounts under this mga minimum line items. So, if on the face of the financial statement of financial position, mga ano lang siya, aggregated amount into one minimum line item, ang mga details niya, ang mga specific accounts will be seen on the notes to financial statement. So, dito na siya i-report sa notes to financial statement. Other non-current assets, these are those assets that do not fit into the definition of the previously mentioned non-current assets. Examples of non-current assets include long-term advances to officers, directors, shareholders, and employees, or abandoned property and long-term refundable deposits. So, dili siya mabilong sa PPE, dili siya mabilong sa long-term investment, dili po siya mabilong sa intangible asset. Dito siya under sa other non-current assets. So, next element of the statement of financial position is the liabilities. These are defined as present obligations of an entity arising from past transactions or events, the settlement of which is expected to result in an outflow from the entity of resources embodying economic benefits. So, based on the definition, these are the following essential characteristics of a liability. So, first, it is the present obligation of a particular entity. It is not an obligation of the other entity, nor not assumed by the reporting entity, but again, it is the own obligation. It is the present obligation of the reporting entity. The liability arises from past transaction or past event, and the settlement of the liability requires an outflow of resources embodying economic benefits. So, for you to be able to extinguish the liability, there's a must, or there's a need for an outflow or payment, okay, to settle payment or usage of your resources, meaning naakaibayad na asset, di ba? Or na outflow of an asset for you to be able to settle the said obligation. So, that is a liability. So, liability is also classified into current and non-current liability. So, for current liabilities, an entity shall classify a liability as current liabilities when the entity expects to settle the liability within the entity's normal operating cycle. So, ang settlement will happen either within 12-month period after the reporting period or entity's normal operating cycle. So, same sa current assets kaganiha. The entity also holds the liability primarily for the purpose of trading. Take note, for the purpose of trading. Same with the current asset. And last but not the least, the entity does not have an unconditional right to defer settlement of the liability for at least 12 months after the reporting period. Take note, for the liability to be classified as current, kailangan wala siya'y unconditional right, or the entity does not have an unconditional right to defer settlement. What do you mean by unconditional right? Meaning na ay discretion. Okay? When you say unconditional right, that is the discretion. Okay? In this statement, may nga siya dere, ang entity daw dapat walay discretion nga mo defer or mo extend sa settlement of the liability that will mature within the 12 months period. For example, if today is the reporting period, then you have a liability that will mature within 12-month period after the reporting date, and then the entity has the discretion to defer or to extend the term of that liability, then such liability should not be accounted or should not be reported as current liability. Nga naman, kay tungod na may discretion ang entity. Okay? Nga iyang i-extend ang katong settlement. But when we say current liability, dapat walay discretion ang entity nga mag-extend sa settlement. So, presentation of current liabilities. So, what are the minimum line items for current liabilities? Trade and other payables, current provisions, short-term borrowings, current portion of long-term debt, and current tax liability. Non-current liabilities, again, if dili siya qualified as current liability, then, of course, dito siya padulong sa non-current liabilities. So, what are the minimum line items for non-current liabilities? Non-current portion of a long-term debt, katong installment, gani class ng mga long-term debt, and then sa installment, katong mga non-current portion. Well, the current portion of the long-term debt should be classified in the current asset. Finance lease liability, deferred tax liability, long-term obligations to entity officers, and long-term deferred revenue. Okay, last but not the least, the last element in the statement of financial position is the equity. So since we are talking about corporation, so our equity will be termed as shareholders equity. So, shareholders' equity is the residual interest of the owners in the net assets of a corporation measured by the excess of assets over the liabilities, or excess over the, or shall I say, the residual interest of the owners in the assets after deducting the liabilities. So, what are the components of the shareholders' equity? So, we have share capital. When you say share capital, this is the portion of the paid-in capital representing the total par or stated value of the shares issued. So, katong mga total shares issued at par value. In excess of the par value, then that will be the share premium. So, that's on the number 4. Subscribed share capital. It is the portion of the authorized share capital that has been subscribed but not yet fully paid and therefore still unissued. So, subscribed pa lang siya. Portion of the share capital has been paid, and then also, once the share capital has not yet been fully paid, dili pa siya ma-considered as issued. Dili pa siya ma-considered as share capital. Okay? Still classified as subscribed share capital. Subscription receivable preferably reflected as a deduction from the stated subscribed share capital. So, when you say subscription receivable, this is the portion of the subscribed share capital that are still collectible. Okay? Pila tong gisubscribe nga kolektahonon pa. Okay? That is subscription receivable. So, normally, subscription receivable is deducted or reported as a deduction from the subscribed share capital. However, if the subscription receivable is to be realized within the 12-month period or within the operating cycle of the entity, such subscription receivable shall not be reflected as a deduction from the subscribed share capital. Instead, it will be reflected as part of the current asset. Okay? So, inani siya. Pag short-term ang subscription receivable, current asset. Pag long-term or if silent ang problem, ang iyang subscription receivable, such subscription receivable shall be deducted from the subscribed share capital. Okay? Then last but not the least, share premium. This represents the excess of the capital contribution made by the shareholders in excess of the total par value. Now, there are other sources of share premium aside from the excess of the contribution of the owner, capital contribution of the owner in excess of the par value, such as katong issuance of share options, right? Issuance of share options, share warrants, donated capital, and so on. And last but not the least, retained earnings. As part of the shareholders' equity, we also have the retained earnings. So, retained earnings or known as accumulated earnings or accumulated losses is the amount of earnings accumulated from the previous period. So, all of the income and losses generated or income earned and losses incurred by the entity, by the corporation, shall be accumulated from the start, okay, from the first year of operation until the current year into the retained earnings. So retained earnings increased by the amount of net income for a period and decreased on account of dividends paid and restatement, if any. So how do we get the retained earnings? So of course, that would be retained earnings beginning plus net income for the period less the dividends paid plus or minus restatement on account of accounting policy changes or errors. So katong mga effects of the changes in accounting policy and correction of the prior period errors, dito man na siya sa retained earnings i-adjust. Then that will be the ending balance of your retained earnings. So retained earnings again will be shown as part of the shareholders' equity. So we have here an example of a statement of financial position for a particular entity. So as you can see, natay assets and liabilities and equity. Okay, so here in the assets, these are classified as current and non-current assets. And then the liabilities, we also have current liabilities and non-current liabilities. And last but not the least, for the equity. Though medyo na ay mga different terms ani, lahi-lahi og mga terms ang gagamit, but still, what we have discussed earlier still have the same meaning or still have the same purpose with this example nga statement of financial position. So normally, for a statement of financial position, 2 dates na siya, meaning duha ka period, the current and the previous. Okay? So isa na current and previous. For what purpose? Para makita ang comparability. Okay? Isa po na siya sa pinaka useful or relevant sa mga users ang comparability of figures from the previous and the current na reporting period. So that's the end of our lecture for this video. I hope that you have learned a lot, and for your further understanding, you may also refer to these following resources. So thank you so much for watching. God bless you all and have a good day.